Hello, welcome to the Freedom Finances Podcast. My name is Bradley Valentine, and I'll be your host for the day. It is Thursday, August 15th, and today we're going to talk about some news. There's been some good news lately, and the stock markets are reflecting that. And we're going to quickly go over the stock market and get into why this all matters and how it impacts us. Now, many find the stock market boring, and when it comes to financial literacy, the markets only play a small part. We don't want to emphasize too much on the markets at Freedom Finances, as we're not in the game of giving stock tips or of setting up stock portfolios. However, our goal is to make sure that all of our listeners and readers are financially literate, and the stock market is part of financial literacy. All right, let's get started with some performance on the stock market. The Dow Jones, which is an index that measures the performance of 30 major companies, is up over $40,000 and it's climbing higher today. Now, a couple of weeks ago, the Dow Jones took a major hit after a bad jobs report. The S&P 500, which is like the Dow Jones, but it measures the top 500 companies in the U.S., is also having a strong day. Now, stock markets are boring for a lot of people, but the reason why I want to emphasize some of this importance is because the stock markets are usually indicators of the strength of the economy. Now, for example, when prices are inflated for normal consumers, when they're buying groceries or homes, what have you, often stock prices will get inflated too. When there are economic crises, the stock market often crashes. You can see this most recent example with the 2020 COVID pandemic. The stock market reacted to the world trauma at the time with the COVID disease, and the prices across the board dropped. So getting back to that information of the stock market taking a hit a couple of weeks ago, the Bureau of Labor Statistics released a bad jobs report that showed unemployment rate was going up and stocks took a big hit. Now, the interesting thing was the report was released Friday morning, so the stock market didn't quite have the full time to react. It did drop for the day, but the stock market was closed over the weekend, and when it opened back up Monday morning, stocks continued to fall. There was some bad news with the Japanese currency and their economic decisions that happened over the last couple weeks, which did play a factor in traders selling off. With the stock market falling, many viewed this as a market correction because the last few weeks and the last couple months, the stock market had been performing extremely high with extremely high prices. And now today, we look at the stock market. It's performing wonderfully. The stocks are up across the board. Dow Jones, S&P, many of the individual stocks are up. And while they're not as high as the records that have been showing up over the last few weeks, they are quickly approaching that territory. So now we're going to ask ourselves, why does this matter to a normal person who doesn't keep up with the stock market? Here's an issue. Many times when we see the news of the stock market on the internet, on the TV, on our phones, we check our accounts and we have a severe reaction. Maybe you heard about the mini stock market crash from a couple weeks ago, checked your retirement account and saw red numbers with a -10 next to it. In many people's mind, they've lost 10% of their money. The problem is that many don't truly understand that after weeks of seeing green numbers, maybe a positive 2 or 3%, 1 or 2 bad days in the stock market looks like hell to their portfolio. So since then, if you go back to your retirement account after looking at those bad days and all the bad news on the internet, you'll see that most of that money has been made up. Maybe it's not as high as it was a few weeks ago, but it's probably higher than it was 2 months ago. And that's where we have to look out for our decision making. Many people might have the reaction or the feeling or the urge to start pulling their money out of their accounts. When you do that, when you pull money out of your account during a price decline, all you're really doing is locking in the losses. Now, if you do this with a 401k or a Roth IRA and you withdraw the money, not only do you lock in those losses, but you'll pay a severe tax penalty. Now, this problem can be multiplied when people start listening to their coworkers who have an amazing stock tip. Maybe they've heard about this awesome stock that's really high right now, and they say, hey, the stock market is terrible. Put some money in here. This is the worst decision you can make, because normally when normal people like you and me hear about stock tips, it's already too late to time the market. These are usually meme stocks that are at the highest they're ever going to be, and that money is going to drop. So when you take money out of your account, you lock in your losses and you throw it into a bad stock that's going to drop, you're multiplying your losses. Okay, so what's the takeaway here? The takeaway is to stay calm when the bad financial news hits. Stocks are going to drop, but that doesn't mean you have to act like a Wall Street trader and start selling off your assets. The market on average year after year, it moves up, and it beats inflation even. Every time you withdraw your funds when prices have dropped, you're going to lock in losses. You lock in taxes if prices have gone up, and you even make the decision on where to move your money. That decision is so difficult to do, especially when the economy isn't looking good. So when this all happens, when you see a bad 2-3 days, stay calm, evaluate, don't start pulling your money out. Now, I hope this has helped. I know we've seen a lot of bad news around the economy lately and even the jobs market. Just know that you need to take this news with a grain of salt and evaluate how it affects you. If you have a job, keep working. Keep building your financial freedom and your financial literacy. Listening to this podcast, that's what we're here for. We want to teach you. If you don't have a job, make sure you're being smart with the way you're spending money and keep looking for those jobs. Okay, let's move away from the stock market for a little bit. Let's go over some quick hits on financial news before we close out the day. One thing to think about is the inflation report for July came out for this year. Inflation was up 0.2% for the month. That is an increase month over month, and of course that's a bad thing, but the rolling 12-month period is a cooling for inflation. That means overall percentage over the last 12 months we've seen a decline in the total inflation number, and the economy might be seeing some relief. Now again, just like there's bad news, take good news with a grain of salt, because we've had good news followed by bad news and everyone freaks out, so it's important to stay calm. But the reason this matters, many have speculated that the Federal Reserve will announce interest rate drops. They meet in September, and that's when everyone thinks they're going to drop interest rates. Now, with the stock market blip a couple weeks ago, cooling inflation, we may see the Federal Reserve actually drop some interest rates. This is a good thing, especially for buyers, because buyers have seen record housing prices in the U.S., some of the highest, if not the highest, in the U.S. history. Now, if you couple that with extremely high interest rates and high housing prices, many feel stuck, like they're unable to buy, whether it's their first house ever or upgrade to their next house, or maybe they felt like they were living above their means and they wanted to step down a level on their house. With housing prices higher than they've ever been, if you bought a house 3-4 years ago at a lower interest rate, you dropping your house price $100,000 might mean you pay more in a mortgage with a new cheaper house than you do with a more expensive house now. So many people have felt stuck, and that's why this lowering interest rate could be a good thing and provide some relief and affordability for house buyers. Now, the purpose of high interest rates, especially as set by the Federal Reserve, is to keep the prices lower and to fight off inflation. So, theoretically, if interest rates were to drop, that means more people will start looking for homes. They feel like it's a good time to start buying their houses, which means demand goes up. And usually as demand goes up, prices go up. So it's kind of a bad cycle, but hopefully some interest rates will provide relief. We'll have to wait and see how the housing market is impacted over the next few months. Nothing is set in stone yet. We don't know if interest rates will actually drop, but there has been speculation that it's definitely going down. Okay, before we leave for the day, let's review some financial tips that we've learned today. Starting with don't overreact to financial news, especially negative financial news. Usually, this is going to cause an overreaction, and an overreaction can cost you thousands of dollars. Okay, next, selling off stocks in a retirement account, especially when the stock market is low, just means that you're locking in losses and locking in taxes. It's important to remember that month over month, usually, especially year over year, the stock market moves up, even when there are short term dips. Okay, and finally for today, it looks like inflation is going to be cooling over the next few months. Hopefully, over the last 12 months, inflation has dropped. So, what we're looking at, maybe lower interest rates. But we're definitely looking at some interest rate changes probably by the end of the year. And if you've been looking to buy a house, it's a great time to get all your assets together, to get your budget together, to know how much you're going to spend, because it's going to be a good time, or at least a better time on the housing market to buy a house. All right, thank you so much for listening today to the Freedom Finances Podcast, episode 2 in the books, and I hope you've enjoyed listening, and I really hope you've learned at least one thing today. Make sure to follow us on Spotify and iHeartRadio. We're also coming to Apple Podcasts soon. Have a great day, and thanks for listening.